Do you want to know a simple and yet effective pattern that can help you identify market reversals, spot trend change with high probability, and get in at the ultimate lows, which results you in getting really high profitability trades? So in this video, you will learn what is a double bottom chart pattern. I mean, this is a simple and yet highly overlooked pattern that I use all the time to get really big profits. And then you will learn how to trade the double bottom pattern the normal way and the pro way. Right, this is where I use the neckline break entry, pullback entry, key level entries, aggressive early entries, and candlestick price action entries. So first off, let's talk about the double bottom pattern. So what exactly is a double bottom? It is a chart pattern that forms when the price drops, hits a support level, bounces up, then retests the same level again, but fails to break through. Picture a W shape on your chart itself. So this pattern shows that the sellers tried to push price lower twice, but couldn't break that support level. So that means that the buyers are gaining control. So once the price breaks above the neckline, it confirms the pattern, and this signals a potential trend reversal from a downtrend to an uptrend. So it looks like this, right? So let's break it down further. The double bottom happens when the market has been in a downtrend and the price finds support at a certain level, creating the first bottom. It then bounces up to a resistance level, which is the neckline, but the sellers push it back down to test that support level again. So when price fails to break through the support level and starts rising, our second bottom confirms the pattern. So traders often wait for the price to break above the neckline. So this is the normal way before entering the trade. So this indicates that the reversal will be more likely to succeed this way. Remember, not every double bottom is a guaranteed winner. You got to look at the other market conditions before entering your trade. To spot the double bottom pattern, you first have a moving downtrend price that makes the two same lows. So the bottom essentially makes a support level. From a price action standpoint, price failed to make a lower low, but instead made the same low. This shows a loss of momentum from the downtrend and from the sellers in the market. Here's the double bottom plus neckline break entry. Okay, so here's how to trade this neckline break entry. After the double bottom pattern forms, you want to focus on the neckline between the two bottoms. When the price breaks above the neckline, it strongly indicates that the downtrend is over and a new trend is forming. So the breakout confirms that the buyers have now taken control and is also your cue to enter the long trade. So you have your double bottom pattern that forms. This reversal point gives you your neckline. So once price breaks the neckline and makes a higher high, you have a fully formed trend change. You would then take a breakout entry going long. After the neckline break, the reversal and trend change are confirmed from the downtrend to an uptrend. The second way to effectively trade the double bottom is by waiting for a pullback entry after the neckline break. So here's how it works. Once the price has formed the double bottom, the point between the two bottoms becomes the neckline. So when price breaks above the neckline, it signals a potential trend reversal from a downtrend to an uptrend. So you first have your double bottom pattern, then there's a neckline break here, the pullback entry at the neckline or at the resistance turn to a new support level. In this case, you had multiple perfect long wick candles at the neckline. So this represents, in a way, a high quality long trade. Let's show this again. The double bottom pattern, the neckline break here. Then this pullback of a long trade to the neckline could be better because this isn't a slim level but a wide zone. Once inside the zone, multiple consolidation candles move sideways, failing to make lower lows. And once you have a higher high candle form, the trend change is now confirmed. Take a look at this example. This is a double bottom pattern with a neckline break here. And this was your imperfect pullback entry to the wide zone. This presents a long trade opportunity. Let's take a look at another example. You have your double bottom pattern and your neckline break here. You then have a pullback to the neckline, forming a long wick candle, a candle color change, and a bullish momentum candle. So now, even better, this is also the right shoulder of an inverse head and shoulders pattern. The head and the shoulders. Now, flip it over. Inverse head and shoulders pattern, which makes this an even higher quality long trade setup. This can also be interpreted as a slanted neckline, and all of this gives you an A trade. So the third way to effectively trade double tops and double bottoms is by combining them with crucial levels. Right, so this strategy adds an extra layer of confirmation, increasing your probability of success. So let's say you have identified a double bottom pattern forming near a major support level. You first identify your crucial support level, and now if this crucial support level is coupled with like important zones, even numbers, this going to be like 2000 level, the 1005 level, that kind of thing. It makes all these levels even stronger, especially if these levels has been held for the longest time, maybe in the past of years of support. So this is going to be like super strong level. Now, when you identify these support levels through these reversal points, as the price comes back down, it creates a double bottom pattern at the support level. To confirm the reversal, the neckline is placed like this. And once price breaks through the neckline and makes a higher high, you will now take a long entry. So this is like an excellent example of the many different opportunities to enter trades. Some would enter long right at this reversal point here, right? Some would enter long right at the second reversal point here. Others would place a trend line and enter on the break of it here. Then other traders wouldn't enter until after the double bottom pattern is formed and the neckline break here. They are all correct, right? Just different entry points based on your trading style and also based on something that you're comfortable with, based on the risk to reward ratio, based on your backtest that you have made for that specific pair, and so on and so forth. Let me give you another example. All these reverse points gives you a crucial support zone with a swing low. So price comes down and creates the double bottom at the very key level. You can take your entry at the break of the neckline or through the pullback here. So let's talk about now a more aggressive early entry strategy for the double bottom pattern, where you enter at the second reversal point. This reverse point here gives you your key support level. So as price comes back down, you now have a double bottom pattern right at the key support level, right? Which presents a long trade opportunity. Now here's the issue. The neckline is all the way up here, also known as a deep neckline. If you want to wait for the neckline break up here, you're gonna get in very late and you would have missed like a lot of the move upwards. So instead of waiting, you can get in right here at the second reversal point of the double bottom pattern. So this is also known as like an early aggressive entry. You already have one touch point here and a second touch point here, which means that when you get in at a second reversal point, it is still a high quality long trade setup. So now you need to add price action. So which you had through the candle color change, inside bars, an inverted long wick candle like a pin, and all of which shows a reaction to the level and buying presence. And then, as always, you can look for an intraday trend change confirmation before taking a long entry through the very low intraday timeframes. So it could be the 4 hour, 1 hour, or even a 30 minute, 15 minute, so on and so forth. Here's another example. This double bottom here is at a key support level. It presents a long trade setup. If you wait for the neckline break, you wouldn't be able to get in until all the way up here. We want to get in early, right down here at this second reversal point of the double bottom pattern. After you had the long with the candle, you want to look inside of it on the lower time frame for any form of price action that signals a trend change from a downtrend to an uptrend. So let's pull up the 1 hour time frame and put it beside this one. On the left is the weekly time frame, which is what we just looked at. Now on the right is the 1 hour time frame. In this area, being the second hit of the double bottom pattern, is the same area as here. You had a double bottom reversal pattern, a break of the neckline, a break of a trend line, and higher highs. And all of which shows trend change price action. And this is where you would go to the even lower entry day timeframes to find an exact entry point using our entry and exit strategy. All right, so now, obviously this is more advanced stuff, right? This is more pro stuff in a way whereby you go deeper and deeper and deeper. This is really powerful, and this allows you to pinpoint the right entry and increase the probability even though you are entering at the riskier level because you are not entering at the break of the trend line. Alright, so now let's sum it up. The double bottom pattern serves as a reliable reversal signal, which indicates a shift from a downtrend to an uptrend. So a successful double bottom forms when price makes two lows at the same support level, signaling a weakening seller momentum and a potential buying opportunity. The neckline break confirmation in the double bottom pattern is crucial to confirm a trend reversal. Pullback entries after a neckline break provides another opportunity to join the double bottom reversal. Now, early aggressive entries at the low of the double bottom pattern allows traders to capitalize on a trend change like way earlier using all the methodologies that we talk about here. So I've created a free 5-part training that shows you exactly how I trade, right? So check out the link in my bio.